Good morning, everybody. Today is the 25th day in the month of January 2022. My name is Heritage Adisa, market analyst at HotForex. Quickly, as usual, we'll check through the markets, see what the dominant sentiment is, see if there are opportunities, and then how we can take advantage of it. But please remember that this is just a general marketing communication for information purposes only and does not constitute independent investment research or even investment recommendation. Just acknowledge that investment in FX and CFD products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which users are solely responsible and liable. Now, what we have this morning in terms of the overall market environment, right, is risk of market sentiment clear across board. We have equities down, we have high beta currencies down, we have safe haven currencies strong, with the exception of the Swiss franc, which is not behaving like regular safe havens should behave, right? And then before today's session, we had some form of slight upside in equities yesterday evening or yesterday night, right, towards the late of the day, and then we saw US 500, US 30 all jump up slightly, and it seemed like the buyers were back in the game. The buyers were back in the fray, but it wasn't long before it just seemed like a pullback at the end of the day, even though it was very solid push higher. It later seemed like it turned out to be pullback, and then we've had continuous push lower in today's session, right? Early in the day, we had inflation data for Australia, which came out really hot, right? The highest going back over 7 years, about 7.5 years. And that has seen, market analysts has seen investment banks also bet or, increase their expectations for a faster RBA rate hike. Now, yes, that saw initial upside for the Australian dollar, but risk off has really weighed in on the currency. And then we've had downside follow through even for the Australian dollar, right? What are the major worries? What are the major concerns for markets? What's the reason why markets are seeing this negative environment, this adverse market environment? First of all, we've had worries over Federal Reserve tightening of monetary policy, right? Because that reduces free money in the system, could curb growth, and is not good for businesses, not good for equities, bad for risk assets generally. And apart from that, the tension in Ukraine still remains a major worry for markets as well, right? With US and UK withdrawing their, delegates, families of the delegates in their embassies in that place, and then NATO, everybody coming around, that tension is building up. I don't expect a war to break out in this generation right now, but obviously with so much back and forth, markets do not like any form of uncertainty, right? And that's one of the reasons, another reason why we're seeing that negative environment so far in today's session. Right now, sentiment is king, causing or markets are tracking sentiment deeply, and then we're seeing all these flows related to sentiment, and it should remain a major driver for the rest of the day, especially that we have a very light economic calendar and ahead of the Federal Reserve monetary policy meeting in tomorrow's session, or starting today, ending tomorrow's session. Equities are broadly lower, right? Oil is trading flat. The tension in Russia, right? Russia is also an oil producing nation as well. And then all of that could also, disrupt supply in itself. And that obviously is good for price rather. And then another reason why we're seeing oil really just stabilize somewhat around the $83 per barrel level. For the VIX is still trading higher, showing significant risk in markets, right? And then it's even moving as high as up to 30 level, right? We moved away from 20, moving from 25. Now we're knocking on the 30 level. For the bond, the US 10-year bond is grinding higher just in small bits, not moving so much, but we see what we are saying. Dollar index in itself is back within the range between 95.70 and 96.60. On the cumulative strength aspect of this, we have JPY leading the FX majors, followed by the USD in line, with the risk of environment that we have. Although the card is slightly supported because oil prices are still keeping resilient so far. On the weaker side, we have NZD weakest amongst the major FX. We have CHF also pressured. Not putting my finger right now on the reason why CHF is being pressured, but Euro is also pressured already on the day. First as a high beta currency, then the tension in the Eurozone obviously puts a lot of pressure on the currency itself. Biggest mover so far, NZD-JPY is just down about 0.5%. Right now, I had this written down, and then we'll look at the charts and look at what we have. Despite the risk off, yes, it's risk off, that's clear. But following yesterday's evening, because I had this written also earlier, following this yesterday's initial or towards end of day deep buyers activity, that's one. The straight up downside we've had almost all month, right, which is already due pullbacks, another one. We're approaching month end, obviously pullbacks, repricing, all of that, pullbacks, and then profit taking also still a risk. That's another one to watch out for. Just before the FOMC meeting, also another major one to watch out for. In this period, we could see some form of retracement. I'm not saying that we won't see continuous downside, no, but that is one of the risks that we need to be very watchful about, especially that we're running into support on majority of the risk assets. For example, on JPY crosses, Euro JPY is sitting on support, Pounds JPY is sitting on support on the key daily moving averages, right? Daily, that's 50 and 100. NZD JPY is sitting on support, CAD JPY also struggling at support as well. So all of that just bodes for or points out to a more careful, be more patient. Let's see how it plays out. Don't be too much in a hurry to jump in, right? Don't avoid selling at the lows kind of energy that we have in today's session. On the calendar, it's going to be a light one, just US consumer confidence, body of notes, right, on the calendar. Let's look at the charts. Now, like I was saying, this was what I was talking about in yesterday's session, the US 500, for example. We had that initial push up and it continued so much. And then it was like, could the buyers be back in the fray, right? It was a solid one. But then when we headed back into, resistance around 4,400, right, we've seen continuous downside for that in today's session. But even today's session, we've not really seen a follow through, right, in the downside. And we're really struggling around this round number for 3.5, right? Now, if you look across board, what we've been seeing all through the month has really been downside, right? And at some point, obviously, profit taking could be a risk. So it's another thing that I'm very watchful about, another thing I'm being very careful about, and I'm being, mostly patient about. So risk off, yes, we could see downside, but all of these things could also point to further pullbacks, further profit taking on this particular one. If you look across the equity space, it's a similar story there. Yesterday's session and in today's session so far. Resistance holding so far, but obviously I don't expect, because heading into the FOMC meeting, it's very possible that we see a very light, move in today's session, light calendar, very muted price action is very possible, although risk off is still very much in play, and obviously you expect risk assets to keep lower on the back of that. Now, crossing over to oil, like I said, for oil, just a moment, so excuse me. All right, like I said, for oil, so far we're right. Sorry, excuse me about that. Right, so far for oil, we're really keeping in the range, right? Keeping more muted. Normally in risk off, you expect oil to push lower, but in today's session so far, we've not really, seen that continuation. And after the push higher we had late yesterday's session, we really just kept in the range. So all of this just takes away some of the potency of the risk off that we're having currently, and just says, just be careful, be more patient, and don't be in a hurry really to jump into stuff right now. For the VIX, like I was talking about earlier, we're currently heading towards the 30 level. Just quickly, currently poking the 30 level, right, on this particular one. And then if you look at this as well, you're also seeing some form of hesitation around this level as well. So that also still tells you to be careful. Yes, the fact that VIX is high, this high, right, way above 20, way above 25, obviously says there is still so much risk. But at these levels, you want to also be very, careful, because pullbacks are also a major risk to pay attention to. On the bond side, really a flat one too, grinding higher, but just by little bits, quite not so much, right, in terms of today's session. Now, in terms of the FX, now, because we talked about risk off, let me just show you what we have in terms of, the major pairs, or even the JPY crosses, first of all, so that we see the levels we're talking about and remain very watchful. For example, starting with CAD JPY, right? On this particular one, we're sitting very clearly on support. Let this load up a bit, just taking a little bit of time, right? Right now, we're sitting on this support level very close to 90.00 level. If you look at this key round number as well, it was previous, resistance around here. If you go back a little more, right, it also served as, that's the quick one. All right, you can see previous resistance around here, support, resistance, support. I mean, clear ones going back as far back as May 2021. And obviously, after the downside that we've seen so far, with oil prices keeping resilient, obviously you shouldn't rule out, we can't rule out some form of profit taking from this level. Yes, key overhead resistance could come in at 90.5, but because we're having this support level. You don't want to sell into support. So despite the risk off that we're having, I'm still being a little bit more patient on this particular one. On NZD-JPY, similar story there as well. Key support, we're trading into support around this key 96 level. You can see previous supports going back, way back, as far back as March 2021. So obviously, I want to sell these assets in this environment, but all of this are time in hands and keeping me a little bit more patient on the day. Pounds JPY is also an interesting one, right? Sitting very clearly on the 150 daily moving averages as well, also a key level of support that you also want to be very watchful about. There's one more I had spotted out. I think USD JPY. Just one more. For USD, first of all, we are trading within the range, sitting on, we couldn't clear out, this key support or lower part of this particular range that we've had over most of this week as well. So all of this are still saying, be more careful. We could say, looking at the strengths and weaknesses, you want to pair NZD versus JPY looking to sell. You want to pair maybe Euro JPY looking to sell. But based on what we have, it's a little bit more dicey to look to jump in. NZD USD as well. If you want to look at NZD USD, also another one to look out for NZD USD as well. We could say yes, further downside in line with the current environment. Yes. But so far so good. We are currently bouncing off this key, this round number around 0.6. Let's see that 0.665. And if we drop down a bit to look at what we have in this session, just quickly. Right, you can see so much hesitation. We've not really been able to keep that momentum to the downside. So I'm being a little bit more prudent with my entry right now. It's not just about trades, right? It's more about, the best trades available. We've moved down so much for the month, for the week, even today, and then obviously pullback are not to be ruled out just yet. One quick review. I had this trade taken yesterday. First of all, with AUD NZD, right? This particular currency pair, I like it because they're both high beta currencies and they should behave the same way. Risk on, risk off should not really affect them, in too much opposite ways, right? They should behave alike, right? That's one. Number two, with the new high expectations for high data, positive data for Australia. Today we now have, even to help us, we had solid CPI for Australia as well, and then more rate hike bets for Australia. All of this have been pointing to more strength for Australian dollar in the short term, against the New Zealand dollar, especially considering the fact that it's been trading at a discount for a while now, right? And then I marked out this key, range that we've had over the last couple of sessions, going back as to late December. And then when we broke out of this level last week, right, I was expecting a pullback. So we had a pullback in yesterday's session. And I put a buy limit on this particular level around here, and my order was triggered around here, and then I was able to close out the trade, just heading back into this overhead, resistance around key round number 1.07. You can see previous highs around this level. So that's how I was able to play this one out. Yes, from the fundamental side, from even the sentiment side, because that also helped me, and technically as well, the entry was also spot on, and I had that play out for me. On the calendar today, it's a light one, really light one. Apart from the Australian inflation data that we had, we don't really have so much on the calendar. Yes, we could talk about consumer confidence for the US, but apart from that, nothing really major. Sentiment remains key in markets, and we need to pay attention to what that has to offer. Before FOMC meeting tomorrow, you might not want to be looking to sell into the low, sell into support before a major event like that. And then whatever you're doing, keep risk managed, keep risk minimal, and then let's see how it plays out for the rest of the day. Thank you. Do enjoy the rest of your trading session. Goodbye for now.